Let's now cross to UBA, where Bankole Odusanya is standing by to talk us through the fixed income and currency markets. Bankole, thank you very much for joining us. I think a good place to start will be the volatility in the currency. I think it's becoming a big issue. Now, earlier this week, we saw it at 159 after the central bank intervened, but it's back to 162.50. Would you also agree with this sentiment? I've put this question to many of our analysts on this show earlier this week. Would you say 162 is like the new normal for the Naira now?
I wouldn't say that. Thank you, Wally.
Right.
What happened was that the CBN intervened on Friday and on Monday, and they actually increased the level of the that sold.
Right.
That showed that they were ready to defend the Naira. Basically, some people didn't cover some positions they had open.
Right.
In fact, sold more, expecting that intervention would come in today. What we saw towards the end of the market today was that people realized that the CBN wasn't going to come for some reason, and they decided to cover all positions.
Right.
So that was what led to the devaluation of what we saw. We were at 161.50, 70 levels.
Right.
And we saw a 1 Naira devaluation towards the end of the market by 2 o'clock.
So is 161 the new normal then? Or do you anticipate that we can go back to say below 160 sometime next week?
I would say 161 levels. It traded all through the week, going back and forth to 161, 150 levels.
Right. Okay, let's move on to the liquidity we're seeing in the money market. OMO bills were not fully subscribed to when the central bank tried to intervene to mop up the excess liquidity. What next for the central bank in your view? Because clearly if there's excess liquidity, the threat of inflation increases.
Yes, we've been watching who's going to buckle in first, but it looked like the CBN actually gave in yesterday when they sold OMO bills about 13.25. They sold just 14 billion yesterday, and today they sold more than 50 billion of the same maturity, February maturity next year. What has happened is that most investors have, continued to bid higher than 13 at the market, at the OMO auction, because the market is clearly still very volatile, and you don't want to go into positions at 12 and market shifts to 13 and you're in a loss. So people are bidding very high, even though there's money. And like we said, there's real demand, especially for bills at short end of the market, 30 to 60 days. Those are not really volatile. And since Wednesday, it's been a buy for the short-term maturities.
A trader I spoke to earlier this week mentioned that T-bills have moved as high as 15%. What levels are they at now?
They are 12.5 at average. They were on Wednesday at above 13.2. Yields have dropped because people have covered because they couldn't buy at the OMO auction. Don't forget that every week we have maturity of old bills that were issued 1 year, 182 days ago. So when these monies come in, of course, you don't want to place them with CBN or leave them at CBN at 10% or at deposit at around 10. You want to cover back. So people have, most speculators or investors held on, bidding higher at the OMO auction, but coming to cover at the secondary market. This has dragged yields down, basically.
Do you think they will continue to go down, though? Or do you think we're going to see a bump back up for yields, that is?
Well, what the CBN has done by selling at 13.2 simply means, we can continue quoting higher than that or at that level. You get? So secondary market is going to take its cue from what has happened the last 2 days of the OMO auctions, basically. That looks like the new low. But for bonds market, the resistance level is at 14. We noticed that some people started covering position and buying at close to 14. And the yields have dropped to as low as 13.6. We expect them to go below 13.5 levels. And then those who bought, who are long, will sell, take profit. It's been revolving around 13 and 14 levels. The resistance level is at 14 for bonds, basically.